Welcome everybody, Jacob Royall coming at you from beautiful Santa Barbara, California. This is not a scene from Santa Barbara. Oh, you guys are actually, everybody is still checking out the poll that I sent out. We're gonna get started in just a couple minutes. I'm gonna let this trade play out for a couple seconds. I'm gonna trade right now and let a couple more people show up and we'll get started in, I don't know, less than 5 minutes. Thanks everybody. All right, what time is it? 1:08? All right, well, let's start by doing what we always do. Why are we here? What are you guys doing? We're all, do you sometimes wonder if we're all just completely psychotic? What are we doing? Do we really sit in front of computer screens hoping to extract capital from more or less thin air? I mean, this is a crazy, crazy thing that we do from the comfort of our own homes. You know, this has only been going on, this retail trader from home computer thing, for like, I mean, a decade? You could say 15 years or so, but I mean, it's very new still. I feel blessed to be on the planet when the technology has been just exponentially getting better for us retail traders. That doesn't mean we still don't have our retail trader issues, but we have tools now that people who were trading 10, 15 years ago could only dream about. Probably wouldn't even have the idea to even dream it. So what we do here on this webinar, for those of you who have not been here before, is we look at this wonderful program called TachEon TimeWarp, invented by Mike and Ron, who are back from their motorcycle trip. They are recovering. They survived. They're taking a few days to just chill. I was thinking about them the other day, like a month or so on the road on motorcycles, off grid, camping, hotel room every once in a while, but mostly outside. I mean, that'll take it out of you. I can just imagine how tired they must be. So at least I'm not that tired. I did do martial arts yesterday or the day before, and I helped my friend dig out his truck that got stuck on the top of the mountain right afterwards. So yeah, I'm not as tired as Michael and Ron. I really want just to shut this screen off over here. So TachEon TimeWarp is a predictive trading technology or predictive trading signal software. Who's here who literally has no idea what TachEon TimeWarp is? Anybody? See, I can assume that everybody has at least some kind of clue because you've been on the website and oh, there. Okay, sweet. Just gonna like take my time to get started here. Take a deep breath. Why doesn't everybody take a nice deep breath with me? The trading day is over. Close this shenanigans. One sec. I'm closing that down. Okay. All right, I'm gonna take a deep breath. The trading day is officially over now. Okay. All right. So there's this guy, Dave, that I was just talking to before the meeting. And he is the gentleman who's in charge of Back to the Future Trading Sales Department. So if anybody would like more information on pricing and software, different software, but we're especially talking about TachEon TimeWarp today, Dave is the guy to contact. He can help you with all sorts of salesy questions. Dave, you want to just throw trying something different. I threw my contact information in. There you go. Thank you, Dave. There he is. Someone is going to read it out right now at the beginning of the webinar. So if somebody comes back and watches this recording on YouTube, where it will be recorded and available to view, probably tomorrow or definitely the next day. Dave's number is 727-742-2626. And his email is very simple, david@backtothefuturetrading.com. Michael. All right, so oh, there's me. There's a picture of me and my dog, so you know who's talking to you right now. It's up in Tahoe, where I spend a month every winter, and I could spend more, but that's what I get, and I'm grateful for it. That's my dog Lexi. Here are some tools of the trade. So what we're going to be doing today is we're going to be going over a professional institutional grade trading software. It's not free. So if anybody's looking for a free indicator and you started watching this video, fast forward. Because what we're talking about is too good, it's too robust, it's 12,000 lines of code. This isn't your grandma's free apple pie indicator. Well, grandma's apple pie is probably really good. That's a bad metaphor, Jake. Anyway, what we're talking about here is a professional grade piece of software. We're not talking about this little dinky child's hammer down here. We're talking about this sledgehammer or this beautiful blue roofing hammer or this nice finished carpentry wood old school handle hammer. We're not talking about free lagging indicators here. We're talking about stuff you got to pay money for because it's worth it. I bought the software. I'm not a sales guy. I'm the guy in charge of this webinar for the last 5 weeks because Michael and Ron have been gone. I am also in charge of, I guess, like mentoring new traders with the software or even experienced traders. I've been having a lot of meetings lately with people who've had the software for quite some time, and I've been able to help a lot of people get a very quantitative trading plan in order right on their own computer. I'll just take the mouse and I help them get everything done. So if anybody wants that, just reach out to me at Jacob at backtothefuturetrading.com. But I'm going to show you folks the exact trading strategies. This is the boiled down version. You know, there's more complex things that we can do, but there's a positive equity curve. I mean, I'll show the spreadsheet too here after we get to the charts. There's absolutely a positive equity curve and absolutely an edge with the trading system that I have been teaching on these webinars. So Back to the Future Trading, we're the only company online that gives the times and directions in advance. We give you the trading rules in advance, and we let the times and setups pass, and 2 days later, we add up the results for pass or fail. Now, what does that mean? What that means is on Tuesdays, for anybody who doesn't know, on Tuesdays, the mainframe computer at Back to the Future sends out, I don't know, I think it's like 4,000 or 5,000 emails to various customers and people that have put their email address into the website. And these people receive, I don't even know how many instruments there are on the list. I don't know, 10 probably, with different time frames. And they, hold on one second, hold on. I gotta center myself here. All I want to do is just get to the charts, and then sometimes I'm like, I don't want to go through these slides. Don't you people all know this already? Come on, don't make me do this. You're telling me that there's people here that are gonna go through this whole webinar. I'm gonna show you that this thing gives an edge. This software gives an edge. See it right on the chart, unmistakable. Most of you probably got the emails that the system sent out on Tuesday, which are predictive times of signals for Wednesday and Thursday. It's uncheatable. And then there's people that are going to get to then this webinar and say, I don't know, I'm not ready to really make that purchase yet. I just need a couple more things in order, and then maybe then. And I just like, I'll just pick my nails for a little while, and I don't know. Don't we run a business as professional traders? Is anybody here just a hobby? It's not a good hobby. It's a very dangerous hobby. And this is coming from a dude like myself who flies paragliders and loves extreme skiing. This, in my opinion, this trading thing should absolutely not be a hobby. And if it's not a hobby, what is it? It's work. It's a business. And any small business or large business owners knows that you have to spend money to make money. There was 4 years, no, I guess it was 3.5 years, 4 years so, of my trading journey where I didn't think I had to spend money on an indicator, on software. I could just do it all myself with stochastics and MACDs and whatever else, which it is possible, stressful, and good luck having a quantitative edge and not being just some discretionary trader who has giant wins and small losses and large losses and small wins, and there's no rhyme or reason. So I made the decision a year and a half ago. No, it's more than a year and a half ago. It'll be 2 years in September, so 2 years, we'll just say. 2 years ago to throw down the money to buy this software, and I've never looked back. I've never had buyer's remorse, ever. This software has helped me transform the way that I look at the markets, the way that I trade, my patience. I'm not the same trader that I was. And that's what happens when a person buys software that is institutional grade, professional level stuff. You know, I'm not going to show up to a construction site with a bunch of other like seasoned carpenters with this dinky little kid's hammer. I'll get laughed off the job site. Probably end up getting kicked in the butt a few times on the way out. Hurt myself maybe. Trip on the way downstairs on my way to my car. What makes me think that trading's any different? What, am I going to show up to trading with this little kid's hammer, aka stochastic crossovers? No. Anyway, okay, I've ranted. I need to get a good rant on before I can start really getting into this. I've realized that about myself. Thanks, Mike. Oh, it just really bothers me. Just really bothers me that people are willing to spend, I don't even know how much, like say somebody's got $10,000 in their trading account, right? They're willing to lose all of that. And that's not even from trading like an idiot. You could lose all of that from your system malfunctioning. You're losing power, not knowing the Ninjatrader emergency hotline number to call and then to close your trades. And literally just from some glitch in your power network, you could lose $10,000. There's a multitude of ways to lose $10,000 when you're trading that have nothing to do with actually trading. You could get taken out by a giant, who knows, forget to put your stop loss in, have to go to the bathroom and then come back and your whole 10 grand is gone. So like if you can't spend money on trading software, well, how could you possibly risk money in the markets? I don't know. It doesn't compute to me now that I have had the software for 2 years. So, all right, I think I've ranted enough, but I might rant more. I probably will. So my big thesis is that although the world looks messy and chaotic, if you translate it into the world of numbers and shapes, patterns emerge and you start to understand why things are the way they are. I completely agree, Marcus. Absolutely. So what this software does is it goes back into the historical data provided by Ninjatrader and its amazing robust platform, and the historical data that it provides it's second to none. So this software, TachEon TimeWarp, searches that historical data for 30 days, 60 days, however long you tell the software to go looking, and it finds swing points that are repetitive. And it projects those swing points out into the future. So no longer am I stuck staring at the chart looking for flags and double bottoms and head and shoulders and pennants and upside down triangle reverse triple sow cow spinning roundhouse sidekicks. That's not to say that I don't still see them, but now I have these swing points that I can correlate. If you want to be the kind of trader that still does the whole double bottom thing and head and shoulders, and then correlate that with these TachEon TimeWarp predictive signals, more power to you. I mean, I've gone down that road. It's a little too hard for me as far as being quantitative about it. Like, what constitutes a double bottom? How many bars do you need? Is how many bars apart do they have to be? And what's the swing requirement? There's just so many. Oh, that's a double bottom. Is it? Tell me why. Why is that a double bottom? I was working with this friend of mine, Jeff, and I remember like just trying to answer a simple question like that with this guy, Jeff, of what's a double bottom. He would just tear me apart. I would venture to say that he probably tear most of everybody on this webinar apart, thinking that we know how to easily describe a double bottom, but doing it in a quantitative fashion and proving it to a gentleman named Jeff who basically could understand this, whatever this theory is back here. Like he needs more information than, oh, it's just when the price hits there and then it comes back up, it just like hits there again. That's not good enough. So what the software does is it goes back and looks for these swing points, and with 12,000 lines of code and lots of ones and zeros, it determines which ones of these swing points are qualified enough, if you will, to be projected out into the future, and we're left with a right side of the chart like no other software indicator company is able to offer in the whole entire universe. I had this gentleman, I hope he's here today. He might be. Anyway, I had this gentleman who emailed me the other day, and he's like, "Oh, I'm new to trading, and just wanted to know like what's the learning curve like, and how do I get into this, and how much capital do you need, and blah blah blah." And I was like, "How did you get so lucky to be brand new to trading and then end up here at Back to the Future Trading?" I'm jealous. I do experience a lot of pain. I'm like most of us probably here before we found Back to the Future Trading. Then every once in a while we get somebody like, I actually had a mentor meeting with this other gentleman who this guy didn't even know what where a bearish candle's close versus the open was. That's how new he was. And he gets to learn from the ground up with TachEon TimeWarp because his friend recommended it to him who also has it. That guy, super blessed. Insane. My experience with the 36 interviews conducted for this book, The New Market Wizards. There's other volumes as well. Market Wizards, The New Market Wizards. I think there's at least one more. There's 3 of them or so. With the interviews conducted for this book and its predecessor, leaves me with little doubt that the random walk theory is wrong. Jack Schwager. So already went over Tuesday, Wednesday, and Thursday, what we do, the emails. Well, now that I'm a little bit more loose and relaxed, maybe I can go over this again. So Tuesday, the email with the times gets sent out. Wednesday's times are in those Tuesday emails, and Thursday's times of the signals are in those Tuesday emails as well. So today we're going to look at Wednesday and Thursday and see how the signals did. I didn't trade all day Wednesday or Thursday today. So I actually don't know what we're going to end up with as far as an equity curve, but I did. Here's a little sneak peek, foreshadowing. I've actually been keeping that spreadsheet going with the equity curve on our Wednesday and Thursday back tests for the NASDAQ 3-minute or the NQ or MNQ 3-minute. So I keep saying signal, blah, 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 but there's also the setup. The signal is just the raw information. It's the dot. That's nice. Okay, a dot. Well, I need something else besides that dot personally. I can't psychologically handle trading dot to dot. I have yet to meet somebody who can. So if somebody out there is able to consistently trade dot to dot every day and keep doing it, I would love to hear from you and ask me how you do it, because maybe you're a robot or you're an alien or something. Or both. What if you're a robot alien? So what I'm going to do is I'm going to show you the exact setup that I use in my daily trading, the same setup that I teach in my mentor hours to clients. You know, and then in those mentor hours, we go into a bunch more detail. I really just, during those mentor hours, I just really want to make sure that the clients completely understand it. And then I also help them set up 8 automatic ATM strategies and just tweak their whole setup to make it look more, I don't know, just more streamlined. And we can go into advanced stuff as well. So this equity curve over here on the left is one of the Apex accounts that I qualified for. That's in ticks. 4,400, and then this equity curve over here on the right is Ron Gardner's. He's the co-founder of Back to the Future Trading. He's in charge of the TachEon TimeWarp Pro training room that is held every Tuesday, Wednesday, and Thursday from East Coast pre-market time. I don't know, like 5:45, 6 a.m. or so. Oh no, I'm thinking California time. What would it be? 8:45. Or so to lunchtime. And that is his equity curve from, I think that's the last year. Oh, I just turned myself up way too much. Oh, calm down. Yeah, I think that's over the last year, and that says 100,000 right there. And that's just with one mini. Or that might be 6 months. I can't make it out. What is it? 21, 22. Yeah, that's the last year. So email Dave if you'd like more information on any of that stuff. So we want to know when in the future to be proactive. And like I was saying earlier, I don't want to just have to react all the time with all those lagging free tools. Not to say they can't be used in conjunction with TimeWarp, but to try to do this trading thing without Warp anymore, I don't see it. I don't see how anybody could see this and then not want to get the software. If you don't have the money, that's why God invented credit cards. I seriously, if I didn't have the money, I would just put it on a credit card, pay it off slowly. Yeah, you get charged some interest, so what? Get it now so you can start learning it, because opportunity knocks. I mean, this is the playing field that we are up against, the institutions in this trading game that we're playing. Where it's an uphill battle for us retail traders. So these times, these signals, I call them bank signals or institutional trade times, these institutional trade windows in time. And I want to know, at least I want to have a fighting chance of knowing where those opportunities may lie. And that's what this software does. It's not woo-woo. There's nothing woo-woo about it. It's 12,000 lines of code, and it goes and searches historical data. I like to think about it as, well, in one regard, multiple regards, as like scanning hundreds of thousands of price points and the reversals and the swings of those price points, even on like an Excel sheet, and then wherever there's those patterns emerge of the price moving up a certain amount and then down a certain amount on that giant Excel sheet that a human being would have a really hard time with, and then predicting those swings out into the future as time windows of selling or buying. I mean, this is a violation tracker industry summary page. You know, I'm going to do something fun. Let me see here. Let me see if I can pull up a current version of this thing and see how much it has changed. That might be fun. Industry tracker. Let's see. Oh, here it is, I think. No, that's not it. Hold on, bear with me, because this might be fun if I can find it. How about that? Let's try that. Dang it, I don't want to waste too much time trying to find where that page is. Maybe somebody can find it. I didn't save the website though. Let's see, how about that? Oh man, just got hit with a wave of tiredness. Goodness gracious. There's probably multiple. Ah, dang it, I don't want to waste any more time. I can't find it right now. I'm trying to stay focused. Stay focused, Jake. Anyway, I've had that up long enough where everybody's able to take a nice glance at it. I mean, Bank of America, $82 billion in penalties, and the government doesn't really care. They actually enjoy it because they get money. And they just say, oh, it's Bank of America, don't do that again. Just kidding, go do that again because we really like it. You give us money. We like to stuff our pockets. You guys go ahead and stuff your pockets too. Don't do that again, okay? Bad banks. Bad Goldman Sachs. Never do that again. Do it 20 more times. Okay. All right, we're about to get into some charts. Before that we do that though, I want to shout out to Mark Douglas, the late and great Mark Douglas. It really made me sad when he passed away a few years ago. He is the undisputed, I'm just going to say undisputed because all of your mics are off and you can't dispute me because your mics are off. Oh, Dorian, you found it. Copy. Why isn't it? Oh man, this GoToMeeting is so weird sometimes. There it is. Oh no, it's probably just me. It's me. I'm the weird one. Who's the weird one? It's probably Jake. It's staring you in the face. Oh yeah. Oh, there it is. Let's see. Let's compare. Okay, wait, let's go back. Let's see if they've tracked any more. So we got 82,900,000,000 in penalties for Bank of America. Scrolling down, 264. Maybe they don't. Oh, Bank of America is doing good. Here, let's put these side by side. Bank of America. Oh wow, really? They're really shaping up. No new penalties since I've posted that. I almost find that unbelievable. Who? What else? What other trading webinar are you going to get on where the guy hosting it does something like this? No, I've never seen it done until Michael did it. And like this violation tracker page, and it's really one of the main slides that sold me on the software. And then of course I saw how the software really did have an edge, and you know, Michael explained that these are the bank times, and like I will in a little bit. And I think this is really valuable for us to see. I mean, Bank of America still at 264, but JP Morgan Chase, looks like they had a couple more penalties. Government doesn't care. From 196, now they at 199. Let's see, who else? Oh, Wells Fargo got slapped on the wrist again. 222, what's the difference there? 21,874. 21,874, yeah. Few $1 million penalty, no worries. Who else? Ooh, Goldman Sachs coming in with some penalties, 87. Well, they must have just had a lot of small penalties, right? Goldman Sachs, 87, 16,399,000. Goldman Sachs, how does that make any sense? I don't understand those numbers. Well, I don't know, who knows how accurate this is, but the point is that institutions are definitely getting penalized. Penalized. Do you guys like it? Does everybody like it when people say penalized or penalized? I never say penalized. That's maybe it's a Canadian thing or something. I don't know. Penalized. Okay, Mark Douglas. We're going to talk about an edge. We're going to talk about an edge that we can get from Back to the Future trading software called TachEon TimeWarp. There is a random distribution between wins and losses for any given set of variables that defines an edge. This truth makes trading a probability or numbers game. When you really believe that trading is simply a probability game, concepts like right and wrong or win and lose no longer have the same significance. As a result, your expectations will be in harmony with the possibilities. And that's it right there. Aligning one's expectations into the harmonics of possibilities. Not just aligning my expectations for, I think this one's going to win or that one's going to lose. Like, well, it's definitely going to be a probability. That's 100%. So let's go over, before we get into the charts, 5 fundamental truths and 7 principles of consistency. Also from trading in the zone, I have these on my desk at all times when I'm trading. Does anybody have any questions so far about any of the shenanigans we've been discussing? Let me just check here, make sure. What would you consider trade taking a flux trade? I'm not sure what that question means, Robert. Could you elaborate, please? Why don't you go ahead and elaborate on that, Robert, and I'll read out these 5 fundamental truths of trading. Number 1, anything can happen. Well, I don't know, that was just a double top and there's a white dot and I just don't think, well, there's only 1 bar left. I don't care, anything can happen. Number 2, you don't need to know what is going to happen next to make money. You could literally, and I mean literally, put a chimp in a chair with a red button and a green button and just have him slam that green button and red button every 5 minutes during regular trading hours, and he could make money. Number 3, there's a random distribution, random distribution between wins and losses for any given set of variables that define an edge. When I read these 5 fundamental truths like this, I'm kind of reading it to myself, like, get in your head, Jake, come on, get in your head. I'm like kind of slapping myself with these words, which I need often. Number 4, an edge is nothing more than an indication of a higher probability of one thing happening over another. Number 5, every moment in the market is unique. Has anybody ever played around with alerts for Ninjatrader, but in particular alerts for when you have an order filled or stop filled, or you know, like there's that stock female voice, order filled, stop filled. You know, you can change those to say basically whatever you want. If you go on your phone or anywhere and you record I can record, I actually have it doing it today, record myself on this app that I have on my phone that records to WAV files. It has to be a WAV file. So I recorded myself with this little pep talk, something effective like, you're in the market now, don't move your stop loss, keep your targets where they are, and take a deep breath, and blah, blah, blah. And it goes on for like a minute. But I was thinking I should actually probably record myself saying the 5 fundamental truths and the 7 principles of consistency. So anytime I have a limit order filled, or if I buy market or sell market, instead of like order filled coming up, it will literally be my voice reading to me the 5 fundamental truths and the 7 principles of consistency, after every single trade that I get into. And it will get annoying having to listen to myself on every trade, but to have that voice of myself coming back at me through Mark Douglas's knowledge and wisdom sounds like a good idea, actually. It would actually help me on a few trades today. So, nope, I don't think so, Michael. Never going to show charts. Nope, we're not sharing any charts. I'm just going to keep, for the rest of the webinar, I'm just going to keep going back and forth between these 2 slides. So everybody's like, seriously? Seriously? Okay. All right. And I gotta make myself laugh a little bit because I don't know. It seems like this week, Wednesday and Thursday, there was like kind of gnarly days, even with my system. Number 5, every moment in the market is unique. Super important. Okay, 7 principles of consistency, and then we're going to look at charts. Number 1, I objectively identify my edge or edges. Number 2, I predefine the risk of every trade. Number 3, I completely accept the risk or I am willing to let go of the trade. Number 4, I act on my edges without reservation or hesitation. 5, I pay myself as a market makes money available to me. 6, I continually monitor my susceptibility for making errors. Number 7, I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. Okay, let's look at some charts. Charts, chart time. It's time for charts. This is my forest scene. Does everybody like my forest scene? Check it out. It's like green candles for like green leaves, and like these are like brown for like the tree trunks and like dirt and stuff. And Jake, you're really weird. Are you on something? No, I'm not. No, I'm not. Okay, let's look at charts. I was just harnessing the power of Michael's silliness, which I don't actually really have to do because I have a lot of silliness in my veins. I want everybody stare at this scene for 1 second while we're gonna go, I mean, like, what is it? Yes, last week we went for 2 hours and I think it was worth it. People seem to enjoy it. So it usually takes me 45 minutes to go through all those slides, and then we'll go through charts for about, I don't know, an hour or so. And I'm gonna teach my simple quantitative open price line strategy that I call the Royal Warp strategy, my last name being Royal and the software being Warp. 1 second, I'm gonna mute myself while I chug my beverage. Nobody needed to hear that. Okay. All right, feeling loose. All right, let's get rid of this background. Go to properties, uncheck chart, background, image. Okay, and now let me take my computer glasses off. I'm gonna switch these candles to something that we're more all used to. We'll do steel blue and up bars as old lace. Ah, there we are. Okay. So for anybody who doesn't have software, I just want to go over what the heck are those dots? As a default, first of all, while I'm thinking about it, I'm going to show everybody the settings. To confirm the settings are the exact same settings as the emails that are sent out on Tuesday to 4,000 or 5,000 people or however many people. So we have settings being swing 8, calendar days 7, 14, and the only other important setting really for the Royal Warp strategy is volatility offset ATR multiple of 1.5. And I just keep it like that because that's what the standard settings are. I have this theory that Michael's favorite instrument is the NASDAQ. I don't think he would argue with me on that. But even, yeah, we'll just for fun and games, we'll say that it is the NASDAQ. I'm pretty sure it is. And Michael and Ron are inventors of this software, and you got to start somewhere when it comes to standard settings when you're going to release software such as this. So my theory is that Michael stares a lot and a lot at the NASDAQ, and that these standard settings happen to work really well on the NASDAQ because NASDAQ is his favorite market. Anyway, that's just my own little theory. So calculating, dots will come back. So as a default, blue dots mean that there was enough historical significance in the data where a blue dot will be printed and that there was selling in this window of time. Not necessarily it's 303 and the price will immediately careen towards the bottom, but there has been historical significance in this area of 303 to 321 in regards to selling. At 321, there is historical significance in the swings to plot a white dot, which means the price has in the past gone up from 321 to 412. And I don't think of it as the dot necessarily, I think of it as the window. Not that window. This window. I'm just going to change this one here to green. Let's go dark green today. Why not? Okay. Okay, and then it just oscillates between selling and buying and selling and buying and buying and selling and selling and buying. And those of you who already have the software, like, can we just get to the fun part? Nope, I have to do this. It's part of my job. And then we'll do shift and then selling. And it just repeats and repeats and repeats. But as we know, as traders, the market doesn't just follow up, down, up, down, up, down, up, down, up, down. So you have to think about these as windows in time. The market's not going to do this. I mean, that's not reasonable. That would be absolutely too good to be true. No way. Market might start coming, market could go down a little bit at this white dot, then it could come up, then it could come down, then it could come back up. What the software does is it projects that at least there has been higher prices by the time 412. The price has been known to be higher at 412 than at 321. But that can change based on some advanced patterns. Like what if the price came shooting up into this 321 buying window? Are the banks going to keep buying there? Or are the banks going to fake everybody out and actually do an invert that white dot and actually go the other direction? Well, there's ways to figure that out. We're not going to get into advanced patterns, and we don't really need the advanced patterns for the Royall Warp strategy that I teach. But basically, blue dots are down, white dots are up. I'm going to keep that stuff there because I feel like I almost needed it for something last time. Let's look at Tuesday first. We're going to look at the NASDAQ 3-minute, just like we have for the last 4 weeks. This is the 5th week in a row. Unfortunately, I lost the data for the first webinar, but we can go test it and put it on the spreadsheet, but I don't have it on the spreadsheet. But we're going to get 2 days in on the spreadsheet today. First, I'm going to teach my strategy real quick. Let's get there. Here we go. I think this is Wednesday. I say Tuesday, I meant Wednesday. Let's just double check. August 17th, that is yesterday. All right. Okay, so before we get into tallying up the wins and losses, let me find, okay, here's a perfect, I just want to find one trade. This is what I do on the private mentor meetings as well. I just want to look for a trade that works very well and very easy, and there's no gray area at all. There's actually not really any gray areas with this strategy anyway. Okay, one sec. So we're gonna be looking at the 933 dot. And this 933 dot is default where the prices should go up. Oh, you know what I forgot to show you guys? You folks, I think there's some ladies here. Are there? I'm looking. Maybe not. Geez, it might be all guys today. Usually there's at least a few ladies. I guess I can actually say you guys today. Sweet, all right. So that moving average on there is the whole moving average, and that's a 21. The reason I use Hull is I just like it better. I don't really like exponential moving averages with Warp. Michael usually teaches with the 120 period EMA. XMA. What should XMA do? I don't know. The whole moving average is the HMA, Australian gentleman, and apparently, I don't know I can't tell you exactly what the formula is, but it has something to the effect of taking into consideration more recent prices, kind of like a weighted moving average, but then it also uses the square root of those more recent prices. So it's very reactive. Because of that, I don't really care about closes above or below it. I just care about correlating the color. Okay, so at 9:33, we have a buy dot. Am I gonna enter the market right at the close of that buy dot? No. What we do is we need the colors to match up, basically. So there's 3 factors that we need to match up. We need the white dot, we need the white Hull moving average. It can't be blue, it has to be white. And obviously we need a white open price line to go with the white dot. And we need a close above the open price line. The open price line is this solid line right here. We're going to get to what this line is later. This is called the dot price line. But right now we're only working with the open price line. And the reason it's called an open price line is it's kind of the open of the candle after the signal candle, but really it's the close of the signal candle. So we need a white dot and a white Hull moving average and a close above the open price line. 1, 2, 3. We're going to enter as soon as the candle closes above. So our entry is going to be right here. And there will be a little bit of slippage, but that's fine. You'll have that. Trading is not exact anyway, I don't think. Okay, so let me get some text going here. Oops. Why is it? Jeez. Okay. And I need one more word. Okay. Okay. So we're going to use this RVR tool that I made based off just off of a Fibonacci. And I'm going to extend it all the way to the next dot because we have to exit all of our trades at 10:15 no matter what. And I'm going to drag the stop line. Let me move this arrow out of the way. I'm just going to zoom in so we can see it a little bit better. I want my stop line right at the base, whatever the base is. Maybe the base of this candle is a wick. If it's a wick, then I'm going to have to draw my stop all the way down to the wick. But in this case, it's the candle body. Okay. So this is our entry. Right here, our target 1 is 1 line above. Our target 2 is 2 lines above. And our runner is somewhere out there over the rainbow. And so with this strategy, we need to enter 3 positions. Thus, 3 stops need to be placed. I usually do 10 ticks below the candle, either wick or open in this case. Does that make sense to everybody? This is, Doug, this is yesterday, Wednesday, August 17th. Okay, so let's take it like this. As we come into 9:33, we get the candle close at the 9:33 buy signal, Actually, I can write that on there too for everybody. Now all we need is a close above the open price line because our whole moving average is white. White hull, white dot, close above open price line, enter market. Quickly move your stops. You can set up an ATM strategy to have 3 targets spread out. NASDAQ, I usually 75 ticks for the first one, 150 for the second, and 250 just as a starting point for the third one. And then you're going to take your stops. Maybe there's 3 stops here, and there's a target placed up here with your ATM, just far enough out of the way. And you have 3 stops. And they'll be, drag them in to where they need to be. And now we drag our targets to where they need to be and just leave the runner somewhere up there. Target 1 is hit here. As soon as target 1 is hit, that means we only have 2 stops left. And these 2 stops, we're going to move to break even as soon as target 1 is hit. So far we have target 1. And then we look for possible target 2 or and then we're watching the runner all the way to the next signal. So right here, we get stopped out at break even for entry 2 and 3. So this whole trade was 48 ticks for target 1, then stopped out at break even here for the remaining 2. And that's pretty much it for a normal buy entry. Let's, oh, here's a perfect short right here. Let me just drag these over. I'll just make copies. Our entry is going to be here. Just make a copy. We'll do a short version. And then I can show you folks the stop puncture as well. Oh, 3 stops. Okay, let's take it like this. 8:36, signal candle closes. Now we do not have a whole moving average that is in sync with our blue color. It's still white. We need the whole moving average to turn blue, and we need a candle closing below the open price line. Kinda, sorta. That's right on it. I mean, we can take that, I guess, but I would much rather see a candle actually closing than right in the middle. So here's a candle closing below, and we're going to take that fib tool. And all I'm doing once I place that anchor, and by the way, email me at jacob@backtothefuturetrading.com, and I can get you a copy of this fib tool, and you can also, I can send you information on how to set up private mentor ship meetings with me as well. So once I place this fib anchor here, all I'm doing is staring at that wick to place my stop. And just like before, but we're shorting, our 3 entries are here, target 1, target 2, and our, just gonna copy runner over here. And our runner, okay. And just like before, we're gonna have our ATM is gonna place our stop loss, far out of the way. We're gonna have runner, target 2, target 1, enter. As soon as that candle closes, move your stops, all 3 of them, to where they need to be. Set all your stops up on your ATM at the same 75 ticks or whatever you decide away, so you don't have to move 3 stops individually to where they're supposed to be. Then we drag your target 1 to where it's supposed to be, target 2, and then you leave the runner with some room. Target 1 is hit here. That means that stop is gone. This target is gone. Move stops to break even. Sit back and wait for target 2. Target 2 is hit here. That means we only have 1 position left. And at this point, there's multiple different ways that you could trail stop this position, but for today's purposes, we're not going to do that. We're just going to either get stopped out at break even, or we're going to take the runner to where it goes. And stopped out at break even here. Let's extend this all the way. So entry, oops, sorry, entry is here. Target 1, target 2, stop to break even. It's pretty simple, right? Everybody get it? Yeah, Yusuf, I put my stop loss initially, say these are all 3 of my stop losses. I don't want it right on the wick. I'll give myself 5, 10. Well, that's for today. I think for the last weeks I was doing 10 or 15. So there's 16. I can't remember if I was doing 10 or 15. Let's do 10. I think it was 10. So 10 ticks would be here like that. I still want to draw my fib tool, my RVR, accurately on the wick though. So, I mean, maybe that's not the best practice, but that's how I do it. I put my stop loss a little farther away, target 1, target 2. I want them to be pretty precise. There we go. Does that make sense? Don, it could be the amount of historical data that you have loaded, data series. Right now I have 60 days. Not sure why I have 60 days on there. Let me put 30. Should only need 30. It could also be your swing strength is not 8, or your look back period is not calendar days, 7, 14. And also every once in a while there's a data feed issue, and a dot could be a little early or a little late depending on your data feed and your computer and the historical data. Your by data feed I mean kinetic or rhythmic or something to that effect. There's a few different reasons that might not be synced up, but most of this 95% of the signals should be exactly the same as mine. Yeah, I don't know. It happens. I've seen it happen too with client meetings where it's just like 1 out of 50 signals might be a candle off. It could have something to do. It's not TachEon TimeWarp. It's something to do with the data feed, Ninjatrader, the historical data. I went down that road of wondering what was up with that long road. And it just came back to the historical data is not perfect. There's a lot of data out there, Warp's doing the best that it can with there's going to be holes in historical data. So very rarely, but they will happen. 836 is 6 candles off. Yeah. 3 minute. Are you looking at the NASDAQ or the micro MNQ? Same contract, 922. Is that the only one that's off? 836. My 836. Yeah, I see that happen every once in a while. It's nothing really. At first, I would see that happen because I did like 5,000-6,000 back tests, and I got all freaked out. But really, what I realized is that it's all about in the moment where the signals are, and even further than that, the software lends itself to it. It does have it. We have an edge. So even if a signal's, we don't even know where to blame it, if it's TimeWarp or Ninjatrader or data feed or where your server is for your internet. I mean, there's so many different things that it could be. But at the end of the day, we do have an edge, even if the dots are off. Here and there, every few days, we might have one dot off a little bit, but it's not going to make or break the strategy. Oh, see, Doug has the same times as me. Yeah, I'm with Apex too, Don. Are you looking at everything on a laptop, Don, or do you have an Ethernet port? Is it Wi-Fi or Ethernet? It sounds strange, but that can actually make a difference. Does everybody get it? Everybody get the short? Everybody get the long? Ethernet, yeah. I don't know, it happens. Yeah, I used to care. I saw it the other day, and it just, yeah, that's, I mean, well, you say you trade Apex, you know that sometimes, who knows, sometimes orders don't even get there. Okay, trying to think if I need to find a good puncture trade. Let's look for I think there was some this day. Well, here's one. Here's one. I'm not going to test pre-market, but this one does do the deal. So at 342, we have a sell window, and you know we do get the sell out of it here, but then we come up and we puncture the stop line, the stop price line. This is what I call an STP trade, or a stop puncture, I believe Michael and Ron call it. So basically it's like, well, the banks didn't show up for this move. You can think about it however you like. The big players were like, yeah, maybe we're done with this run, and then maybe retail takes over, or a different big player, somebody pushes it up in the opposite direction. So because this candle closes above the dot price line, I actually will turn this selling window into a buying window at this point, and then place my trade the exact same way on the dot price line as I did on the open price line. So this would actually be a long at this puncture and close above. Even though we're in a sell window, it turns basically into a buy window if we come and we close above the stop price line. We would just draw the target and the stop, exactly the same. Entry, target 1, entry, target 2, and that third entry was stopped at break even. Does that make sense? And same thing, vice versa. Here's one for the opposite direction. This was initially a buy window at 518. We actually never closed above the open price line here. And then here we actually close below the dot price line. It's an STP trade, stop puncture. Draw our Fibonacci the exact same way, enter, entry 1, 2, 3, target 1, target 2, and target 3 are taken out at break even. Otherwise, we would just close all positions at the next signal, even though we're coming into a short signal, because we don't know if we're going to get a close above or below the open price line. So this strategy is all about the open price line or all about the dot price line. Does that make sense? Oh yeah, the target 2. Oh man, dude, I'm so fast with this thing. It's like butter. I can even set up my ATMs on the fly so fast that I can get like yeah, it's really fast. I use Control F for Fibonacci. Control F. I mean, it's actually really easy. Depending on where you're gonna go, what you're gonna do. It's quite easy to do. It's totally a doable trading methodology. By the way, those trades were not ones that I would have taken. I was just showing how fast the Fibonacci can actually be used. The RVR tool. Okay, I think we. Does anybody have any questions on the strategy before we do some spreadsheet stuff? Thursday time, use a 1-minute chart. Yeah, but I don't trade the 1-minute chart. We can try the 1 minute though, if everybody wants. I can't stand it anymore. I just wanted to keep consistency. Oh, that's what I wanted to mention last time. If anybody actually really wants to see how the signals do, the 714 swing 8 look back period that are sent out in the emails, all you got to do is just pull up your chart and do this. Here, watch. You can do it yourself. I don't want to waste everybody's time with just doing dot to dot. You can just do that yourself. So like you will literally have 742 in your email. Well, not for the 3 minute because they don't actually send out. I don't know if they use the NASDAQ 3 minute, but if you wanted to test the 1 minute, for instance, and you just do it yourself. I don't want to do it for you. Come on. I want to talk about a strategy that we can actually trade. I have multiple people are all trading this exact strategy and getting lots of good feedback. It's tradable. You can actually do it. Emotional. Here's the 1 minute. So if you wanted to test that the 1 minute based on the emails, you have a chart. You have Ninjatrader or get Ninjatrader. It's free, and then just pull up the emails, and then the emails will come with this, warp panel. Add. Okay. Let it calculate. So this is what you're going to see in the emails. You'll see 1153 blue, which means down. 1204 is up. So you can just take the emails on one screen and then your Ninjatrader on the other if you don't have TimeWarp, and then you could just do this. So at 1204, buy from the close of this candle, dot, sell, buy 1226, that's a loss. 1220, 1232, sell, that's a win. Buy, stopped out, blah, 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 blah. I'm so bored of that, but if anybody wants to do it, I mean, go for it. I'm not going to do that on this webinar though, because I'm just not do what I want. Back to 3 minute. I mean, you can go, if anybody's interested in how the dot to dot works, just go back and watch, like, I don't even know how many webinars are on YouTube with Michael doing dot to dot. I mean, it's pretty conclusive that there's an edge with this software. Even just doing that, buying at the white dots, selling at the blue dots, buying at the white dots, selling at the blue dots. But that, to me, that's not, I can't trade like that. I just can't. And I want to complete my spreadsheet with a 3 minute, because this might be the last webinar that I do for a while. Okay, let's go back to Tuesday. So we can keep those. Tuesday was pretty gnarly. I don't actually even know if my strategy is going to be a winning strategy for these 2 days, because it was a little rough. I didn't trade. Well, it was for my morning sessions when I traded. It was, but there we go. Okay, so another thing that you need to know about this strategy is I don't trade until after the close of I don't trade the first 10 minutes. So we're not going to be trading until 6:42 in this case. Is everybody ready? I'm going to start blowing through some stuff. If you have any questions or don't understand the strategy, there's also other webinars that I teach it. That's a good question, Robert. I thought about that. Get them to send out the 3 minute. Why? Why though? Why should I ask Michael that? I don't want to ask him that. Just buy the software. You have the software, don't you? Why do you need it? Do you have the software, Robert? What Robert are you? Don't you already have it? Don't you already have the software? I don't want to make Michael change something. No. You don't need, I don't need to talk to Michael about sending out the 3 minute. No way. I don't want to bother him. Change something that's like been there for I don't even know how many years. I'm like, no way, dude. You got his email? You tell him. All right, 6:42. Let's look for what do we have here? So we can't go long. Here's our long window. 6:42 buying window. We can't go long until our whole moving average closes white, and that happens here. Stopped out. Oh no, wait. Let's see if that's 10. Oh, I gotta make my There we go. That's probably not 10 ticks, 6 ticks. So not stopped out. And remember, I already made the rule and I've had the same rule for the last few weeks. We place our top stop 10 ticks below the wick of the puncture candle. And right there is 6 ticks. Maybe 7 if I'm even pushing it. So I'm not calling that a stop out. But it's also not that much of a win. So it's actually still a loss. So when you have a loss with this system, you have 3 losses. Okay. Yeah, the beginnings of this day, it's not pretty. Okay, so now we're in a selling window. Waiting for a hole to close blue. There it is. Don't hit first target. Oh, you know what was up with Wednesday? Wednesday was that FOMC that started at 11 a.m. California my time. Those can be weird days. This is a loss, small loss. And again, we have to close all of our positions at the next signal candle, no matter what. Let me just make sure that I'm going to be able to space these out. I need to go a little smaller. Otherwise, I'm going to have to adjust all these before I go on the spreadsheet. And I don't want to do that. Michael and Ron are back now. They just got back and they're recovering, trying to get back in the swing of things. They've been gone for over a month. Okay, so now we need a, oh, see, look, this is another stop puncture. This is just a gnarly day. This is something you got to deal with as a trader. I'm actually glad that the days starts out like this to show anybody who does not have the software or is using this strategy, that there also, there can be days that aren't great. Just how trading goes. Don't change your system though. If you've tested hundreds, I mean, how many trades do we have on the spreadsheet now? We have 131 trades on the spreadsheet. There's definitely an edge after. If you test 100, 200 trades, I mean, some people even say 50 trades is enough to determine if you have an edge or not. So this is a stop puncture trade and another stop out. A lot of shenanigans going on here. And we stop out 3 positions. Gnarly stop out too. I remember this trade. Pissed me right off too. I took this, trying to follow my rules. Here's the trade that we already went over. Here's another trade we already went over. Just make sure we have it right. Yes. Okay. Spread these out. I'm just like waiting for the day, since this is my 4th webinar in a row. I'm waiting for a day where this strategy and TimeWarp with stock settings doesn't end up with a positive equity curve at the end of the day. It hasn't happened yet, but could happen today. We'll find out. I really honestly don't know. All right, so here at 10:15, selling window, this candle closes below. We don't need it to the open price line. We don't need it to close below the whole moving average. We just need it to close below the open price line. And we're gonna get in there. It's gonna be a tiny little trade, and we're gonna drag our stop to the wick and see if we can make up. There's target 1. That's something. And we are, looks like we're actually stopped out annoyingly at break even. See, we would have gotten stopped out at break even there for the remaining 2. I'm not going for 1 billionths of micron accuracy with this because it's a webinar, but we'll get the general idea. Oh, here we go. White dot, white price line, white hole, and you're in here. Stop to the wick. Target 1, target 2. Target 1. Not stopped at break even on the way to target 2. Let me move this over here a little bit. Now we're at 10:24, so we're more than halfway through the day. Stopped at break even. So yeah, Wednesday and Thursday, man, it's just not a lot of opportunity for oh, I want to show you guys something that I actually took this trade. This is where the econ was. Actually had somebody on a meeting live with me while I was, like, our meeting started at 11. I was like, I'm definitely getting in this trade. I don't care if I'm in a meeting or not. So the econ was here at 11, the FOMC minutes, and I waited until I got a close above. This is not normal. I don't normally do this, and I'm not going to count this in the back test, even though I really want to. But this isn't. I just wanted to show you folks what I actually did. So the econ was here at 11. I noticed this. This happens all the time. We know this, right? Anybody who like trades the NASDAQ and pays attention to the FOMC news releases, especially the ones in the afternoon, oftentimes we'll see, relatively small candles, consolidation, ranging, bunch of BS until the econ. And then we're going to slam. I mean, we're like quadrupled almost our ATR in one bar, and then all those bars. So at 11, I knew that we were in a buying window. And there's also this nifty thing called the splits. I don't want to go too much into this, but actually I'm not going to go into it all. I'm just going to do that and say that because of that, there was a reason for me to enter there. But we're not going to, unfortunately, I'm not going to be able to count that in my back test here with you folks. But we did get a close above the open price line, and we're in a buy window, and the hole was white. Don, I tell you, if I get on your computer and I see that swing strength is an 8 and there's something going on, I am gonna, just kidding. Yeah, I mean, if you want to set up, or you can contact Rachel or something, or I can just look at your computer real quick. Just send me an email. We can figure. Hopefully, I can figure it out. I don't know. I'm not a data tech guy. Okay, so no trade there. No trade. No trade. Now, if I say no trade, we can't go long here because our whole moving average is blue. 12 o'clock. Oh, geez. I remember this one too. Let me make this a little bigger so we can actually see. Blue moving average, blue dot, giant blue candle, Scary's trade. That's what the system says to do. And we end up getting like freaking 34 ticks times 3. We don't hit target 1 or target 2. And we stop timeout at 12:21. Now we can go long if our whole moving average turns white. It turns white here, and these are weird trades. I had a customer, fellow trader, ask about down bars closing above the open price line in buy windows. And it was a good question. Do we take this long? Well, that's how I've been doing it in all the webinars. So that's what we're going to keep doing. So tiny, weird little trade. The close of that candle is here. And then the wick is there. I have no idea what's going to happen with this one. Stopped out, not surprisingly. So that gentleman and I had a conversation. It's like, well, like maybe we only take the trade in this situation if it was an up bar, because when you think about it, that low close there and the distance between the wick, like there's a high probability about getting stopped out there. Did we get stopped? Where's that wick? Yes, we did. Oh, you know what can happen? This is a little bit of an interesting thing when it comes to back testing this particular strategy, or any strategy that has anything to do with break evens and market orders, and also limit orders, but particularly this strategy at this moment. I'll just speak to this. We could have actually, I think we did, I remember this trade, we came up, hit our first target, and then, let's blow this up a little bit. This is kind of important. Let me just get rid of these for a second. So when if you folks go to backtest this thing, this is one of the things you really have to be aware of. The best way to backtest this is on market replay, because how do we know if we entered here? How do we actually know if we got stopped out? I mean, sorry, if we hit target 1 and then got stopped out at break even here for those 2, or we could have entered here and got stopped out on all 3 before we hit target 1. No way to really know that unless we go down to the 1 minute, which we can do. I don't feel like doing that though. We could go down to the 1 minute. Should we? There's only a couple of these. I guess we can. I'll show you how to do it. Just yesterday, I don't want to spend too much time on it. I think there's only like 2 or 3 trades in like all of yesterday and today that are anything like that. Where was it? Where was the day? It was right here. Now we're on to 1 minute. So we have the same drawing tools. Now we want to see, oh yeah, see? Looks like we came and actually did get stopped out before we hit the target. Does that make sense to everybody? So if you ever have a situation like that, switch down to the lower time frame and you can see more of a footprint of what happened. So we can see, let me get rid of these. We can see that we entered here. This is the same place of entry, and then did indeed come down and get stopped out before we hit target 1. And that makes a difference with this strategy. So I think this might be our first day ever so far on the webinar where this day might not end up with a positive equity curve. 12:45. Oh, we got to switch back to 3 minute. Is it loaded? Yes. Okay. $17. Oh, look at that little, oh. That one closed below. I got to count that as a loss. I think we're going to have our first not winning day with this strategy since I've been teaching it on the webinars. Eamon, if you're listening, look, I think I found it. I found the first one. Eamon's like, this friend of mine, fellow warp trader, he's like, oh man, I've yet to find a losing day with that strategy yet, or trade one. And I think I found one. I didn't trade this whole day though, but we're going to test the whole day. Let's get this day. Let's get this puppy on the spreadsheet and see what happens. And then tomorrow, I mean, sorry, today, when we test today, it'll be a lot faster. I'm really curious to see if this thing, I doubt it ended up with a win. You find me a strategy that never has a losing day with taking every single trade that you're throughout the whole trading day that you never find a losing day, please let me know. I'm actually glad to see this because it makes me think it's a little more realistic. Literally, like not even close to a losing day on, oh, come on. All right, we know they're all 24. How's everybody doing? You hanging in there? Is everybody still alive? Get there, you stink. All right, here we go. Oh, gnarly. All right, $5. We're gonna keep going with as if this was NQ. So $5 a tick. We'll go heavy on the commissions instead of lifetime license is like 4 something, but we're gonna do $5 for commissions. So this is included in here. This giant number here, that's just so that my contracts for the Ryan Jones scaling method stay all at 1 without shifting. And then that 1 also has to do with the Ryan Jones method. Don't need to worry about that. So we're gonna put the ticks in here and see what the equity curve does here. The reason that the numbers keep extending to the downside is that the Excel sheet is already calculating the commissions. and it doesn't have any tick data yet. Okay, so let's watch our equity curve go down for a bit. Minus 22. I'll try to keep it exactly as I have it on the spreadsheet, even though it's kind of annoying. Minus 24, minus 23. And then, oh yeah, that was just my stop thing. Okay. 55, 109, 1. August 17th. Yes. Oh, yes, a couple winners here. 1, 2, 48. 2, 0, 43. 0, 90, 47. That didn't take long. We're going to cruise through the next day too. 38, 34, 38, minus 28, minus 23, minus 24, minus 32, minus 32, minus 32. Oh, there, I think we finally have our first losing day. 26.95, 19.985. First one out of 2, 4, 6, 8 days, 7 days. And it's not even that bad. If that was micros, well, let's just do the calculator here. So we started with 20,000, or well, I guess we should put this in. Well, we can. 28,695, 20,695. Oops, come on. 20,695 minus 19. This is with commissions. 19,985. 19,985. $710. That's not bad for taking every single trade in the day. With micros, that'd be $71. Okay, so let's test the next day, which is today, 8/18/22. And again, I have no idea how this is going to work out. Oops, why does it say calculating? Anyway, we know what that is. Something to do with the 8/18/22. There you go. All right, let's cruise through this next day. And if anybody who is watching this later on YouTube wants to see some more results, then just simply go to the previous week's webinars, all of them. Now remember, we're not trading. Here's the open. 6:30 my time, California. We're not trading until 6:40. So we don't trade this system the first 10 minutes. And here, this whole 6:33 window, no trade. We do close above the open price line here, but our whole moving average is blue. And then we have this blue signal for selling, and we never get a close below the open price line. Those of you who have the software and are experienced with it might see that this is a beautiful pattern 4, but we're not allowed to talk. I'm not allowed to talk about show pattern 4, 5 and stuff on the webinar, or maybe I am. I don't think I am though. I don't want to go into all that. However, there's more to know. There's more to meets the eye. And that day that I just showed that was a small losing day might not have been so if we were using the patterns. All right, so no trade here. 742. We have a white hull, white open price line, and we're looking for a close above. There it is. Tiny little sucker. And we just draw that the same way. Ding, ding, ding. Oh, target 1, target 2. Let's make sure that actually did hit it. Oh, try to be accurate. Let's see if it actually did. I think we missed our target by like a few ticks. We did, but we hit target 1. And taking out a break even for these. Okay. Oh my God, Don, if I could reach through the computer screen right now and just slap you a little bit. Nuh-uh, not really. For real, Don? But you said that the one signal was off by like minutes though, not hours. Not just really, not just because I'm on California versus Eastern time. Oh, you might have been like looking, oh, that's crazy, because maybe some other signals actually lined up. That's funny. You're not the first though. I've actually done that a few times, at least a few times. So you are not alone, Don. Okay, so 803. Oh, here we go. There's a trade. Blue hole, close below. Looking for target one. No. Yeah, these 2 days were like not as great as the last 7. Oh no. Come back. There we go. Okay, so those were three losses there. 818, close above. Oh, it's not that accurate. Let me see if I can get that a little more accurate for us. There we go. Let's see. Target 1. Target 2. And runner. I guess we'd have to switch down to the 1 minute to really see if we didn't get taken out of break even there. I don't want to do it, but I'm going to do it since I did it for the other one. Feeling lazy. 20 more minutes and it'll be 2 hours and then I'm done. Regardless. Okay, where are we? Over here. This is good training though for backtesting. This is like what you have to do. Jim. Really? It's gonna make me try. It's gonna try to make me switch down to the 30-second then, because I don't know if this got hit here. See, check it out. Target 1. Did it come down? Stop us out? And oh my God. Fine. It's 30-second. Let's see if it even loads. 30 days. Or we can look at some 30 seconds candles signals. Oh, please God, load. Oh! All right, well, I'm not going to get into all that. We're just going to say that it worked. Ugh. Whatever, it's one trade out of like, how many? Like 60. If it comes down to like, we can take a look at it later. If it comes all down to like 30 ticks, then we can deal with some data series and deal with all that. Okay, so no trade here. Here we got close above. And for those of you who have the software, that looks awfully close to a pattern 5, doesn't it? Higher high than this high. This is a pattern. This is our pattern 5 candle. This one and this one. So this candle counts. It's higher than this. It's higher than that. This is a pattern 5. Pattern 5 means down, but that's not what we're testing. Just saying. Just saying. But this simple system, simplest of all simples that I can come up with, is stopped out here, annoyingly so. Does anybody else want to throw things this week, or is it just me? Just kidding. Well, I did throw a soda can in the trash. Well, it was a little bit kind of down my hallway. What? Oh, excuse me. Ugh. Oh, see, oh, this is cool. Stop puncture trade after getting stopped out. This isn't that rare, and this is allowed with the strategy. well, I already actually went over it. There was this 100% what, I don't even know if this is going to be a winner though, but so now we're shorting because we got a puncture and a close below, just barely, but we did. Oh, it's like they knew. Let's get that lined up. Is that on it? Oh, the stinking whole moving average is right in the way of the wick. Yeah, I don't think that target got, oh, come on. Oh my God, I need a drink of my apple juice. Wink, wink. Just kidding, I don't drink. Be September, Labor Day. Labor Day is gonna be 8 years of Jacob Royall not drinking. It's a good thing too. Right here. Right there, that's no target. You little journalist. However, we do make 31 times 3, so we got to close all positions. This is actually good learning right here. Good learning experience. Yeah, I always keep telling myself that. Yeah, good learning experience. Yeah. This candle closes below. Ding, 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 ding. Oh, target 1, target 2. Target 1, target 2. Stopped out at break, even on the runner. I'm like, it's crazy how like the runners didn't do squat this week. But last week, the week before that, and the week before that, the runners, those third runner positions crushed it. But yeah, you'll have that. I mean, this was okay. Let's think about all of this all together. Let's think about what was different about this week than last week. Check this out. I'm not saying change the strategy. That's not my intent. But I do want to take a little poll and see if let's check something out here. I mean, we're here to study and to learn together. Okay, so this week we had Wednesday. I'm just trying to look at, okay, so this week was, why, just give me all of it. There it is. August 15. There we go. Okay, so last week was the 8th, was the Monday, okay? So Monday, no news. We had a CPI, PPI, let's just look at the red. CPI, core, PPI, and consumer sentiment. Take note that all of these high interest, high volatility news events were in the morning hours, East Coast. I have noticed this. Let's look at the week before. I need one more freaking day. Why does it make me do that? There we go. Oh, there, nice. Okay, and then the week before, we also had, that's August 1st, okay? The week before, we also had, I believe, all of our, to keep it very simple, all of our red econs in the morning hours, either pre-market, 5:30 a.m., or a half hour after the market opens, 7 a.m. This is all California time, so 7, 8, 9, 10, this is 10 a.m. East Coast. What happens, and I've heard Michael talk about this and Ron talk about particularly FOMC, not just the red news event, but particularly FOMC. And I would like to also add FOMC that are in the events that are in the afternoon. I mean, in this case, it's meeting minutes. So the difference between this week and the previous 2 weeks is that this week had an FOMC in the afternoon, which kind of, in my opinion, bunches up and ranges, and it tends to consolidate and range as there's uncertainty all the way till this news event. And then I think it reverberates through Thursday, and a lot of times it doesn't affect Friday, who knows. Anyway, just wanted to posit that, show that difference as far as the news events go. If you are in a trade like that 11 o'clock deal that I showed on Wednesday, just be really mindful of the afternoon FOMC events. Yeah, and exactly, Doug. Thank you for mentioning that. I had that thought as well. Mid-August low volume. I mean, dude, all the kids are going back to school. Like there's a lot of reasons where institutional traders might not be sitting at their desks. Speaking of volume, I've done boatloads over 5, 6. I mean, at this point, probably 10,000 trades. And I actually have a spreadsheet somewhere wherein I compare low volatility weeks to high volatility weeks using warp dot to dot. And one of those low volatility weeks were the holidays, and I actually tested the holidays, and by holidays I mean the week of Christmas and the business week, if you will, of Christmas, and the business week, if you will, of New Year's. And no matter what settings I used, those 2 weeks of the low volume, they were not good. So I recommend probably not trading those 2 weeks at least, but the volume, you know, warp really does like volume. We really need volume to be able to capitalize on that runner. There is a theory that I have that if the volatility is low, maybe we don't actually use the third position with this. And by volatility being low or volume being low, we'd have to quantify that. Whatever that number is at that point, maybe we don't use a third runner position. So if the market's ranging, for instance, I use ADX to determine that. Maybe if the market is ranging, we only use target 1. We do a 1-to-1 and we're shooting for target 1, and that's it. Because why should we expect a giant crazy winner if the market's been ranging all day? I actually really like that theory, and I am working on it currently. So the work never stops with trading. It can always be better. Okay, so now all we need is a white dot. Here we go. Close above. Target 1, target 2. Definitely not stopped on break even. Target 1, target 2, and not surprising, our runner. Our runner actually doesn't do any better than target 2, but a little bit. At least it did something. That's our first runner. That is literally our first runner that we've had in all the trades that we've tested so far, yesterday and today. 10:30. We're in a blue window up. So here our whole moving average turns blue. We're in a selling window, and we got to close below the open price line. So now we are shorting. Looking for target 1. Oh, you little. This week about drove me nutso. Just to show, we got 7 ticks away from hitting, probably even closer than that if I'm like really accurate. But I'm not going to count this as a win because that clearly did not hit target 1. So we got you know what we have to measure this to see if this is 10 ticks or not. I bet you it's like 15. Oh yeah, toast. Toasted. Absolutely, just make sure. Come on. Yeah, I'm done ski. Yeah, you're toast. Okay. So all 3 stopped out at 51. This is why I read Mark Douglas 7 principles and 5 fundamentals before we get started. Okay, so to 11:42, and we close above the open price line here for a long white hull, white dot, white open price line. Oh, look at that. I actually hit target 1. Stinking. Oh, you know what Ron likes to say in the pro trading room when there's a day like this? Because Ron's not perfect either. There's no such thing. He's trash. His day was trash. It's just trash. Oh, that's a pretty good Ron impression. Is it pretty good? You think that's pretty good? Maybe if HMA is still white, let the runner run until it goes blue. Yeah. Yeah, I've thought about those things. What's crazy about even changing one aspect on the strategy like that is you'd have to literally go back and test every single other day. You can't just do one day. You got to see what that create more or less ticks over the switching. Okay, so target 1, and we're almost done. Got to close and have to close position 2. Okay. All right, so now we're in a selling window, just waiting for that hull to turn blue. There it is. Don't hit target 1, but we do hit 32 ticks at the close of that signal candle here for our buy candle. And I already know what this one's going to do. This is a stop puncture trade. Sometimes I'm on the fence on whether or not to use or take these stop puncture trades with this system. Just a caveat, just letting everybody know I'm still kind of on the fence with these, especially on the fence with them if we're ranging. This is the ADX and we're at 25 or below, that's ranging. If we're above 25, above this line, we're trending. I have this theory where to not take these in my personal trading a lot of times unless we're trending. So we're ranging here. I might not have taken that, but that's not the study that we're doing. So we're doing this study. Keep it consistent throughout these 4 webinars. Do not hit target 1. And we get stopped right before we hit our blue dot. 103. Oh, okay, well, that's a short. Don't have to be below the whole moving average. You just have to be, how's that not gonna get, oh, look at that. Got target 1 and a break even out of it. Oh, and then we're done for the day at 3:15 my time. Right on time here. Literally the last couple ticks of the market. I wouldn't be surprised if this day is a loss too. That's pretty cool though. I don't think it's going to be a big loss. And damn straight, you're damn tootin' over 8 days, 9, 10. If I can get we can go back and do that the rest of that data. But anybody who watched that first webinar, we were like up $6 grand for one day with NASDAQ and then up like 2,000 or 3,000 for the next day. So in 10 days, if we have 2 small losers this week, it's still not bad at all because we are absolutely net positive. And this would be not undoable without these dots. This strategy is really cool because you know when your opportunities are. Yeah, you might have to wait a few minutes until you have that close above or below, but once you do, you can set your auto ATM up and go have some coffee. You know when your opportunities are going to be there. It's not like any other trading system where you just have to constantly stare or like set alerts on stochastic crossovers and just to be ready to go at a moment's notice. Okay, so let's do it. And then let's shut this webinar down. Everybody doing all right there? Oh, you're welcome. Thanks, John. Bye, John. You watch the recording. Okay, so oops. 2050. Got to put those commissions in. It's incredibly vulnerable to share this strategy and have literally, I do not know if this is going to be a winning day or not. I don't know. I really do like that it maybe it's not, and it makes it seem more realistic. 55, 67. Oops, not 678. Ho ho ho! See, I told you. Just kidding. 67, 34. Yeah. Oh shoot! I gotta drag this down. Need some more data in there. Geez, it's a lot of trades. Hold on, Excel sheet. Chill out. I need the formulas to carry down. I'm going to delete that. And 34. Okay, we were 34. Where was I? Oh, over here. Okay. Okay, so now we're here at minus 64. 64, minus 63, minus 62, 31, 31, 32, 76. 40. Oh, I forgot to draw in this break even. And 0, 53, 108, 119. A lot of trades. Is it calculating? It's not calculating. Son of a gun. I'm gonna have to, okay. 116, 4, 31. Okay, that's the day. Let's get this Excel sheet working properly now. Hopefully. Yeah, it's not calculating correctly. All right, let me take this data and move it to the side. Audience view 100%. Wow, that's just awesome. Copy. Let's just put this over here for a second and see what I messed up with the formulas. It's working fine till I was working fine on that day. Okay, so let's just, it's so annoying when this happens. I'm not an Excel sheet master by any stretch of the imagination either. Let's just delete all that. And then let's, seems like it was working good, so let's copy these formulas. See if we can bring it all down at the same time. Oh, come on. Don't do this to me. Oh, it's still not working. Let's put a line here. People who are good at Excel is like, oh, you didn't just do. Yeah, it's Jacob, J-A-C-O-B, at backtothefuturetrading.com. And then, one of the main purposes for this webinar is to sell the software. And that's David at backtothefuturetrading.com. I'm going to go through the sales stuff here in a second after I get this doggone spreadsheet working. We just copy that and put that here for a second. Let's see why. Excel's so weird sometimes. I don't know why the spreadsheet does this. I wish I did. Okay. No, it's still not working. Son of a... Let's try from all the way up here. It's just not working. Oh my God. Why? I might have to grab a fresh spreadsheet and just paste all the things in there here. Hold on. Like ongoing. No, it's not that. Oh my God. Why? There. Well, I know that this is all good. Let's copy that. Let's put that here for a second. Let's just delete all of this. Let's drag our contracts down. Give it plenty. Let's drag this formula, these formulas down. Son of a gun, dude. Oh, I know why. Because the commission formula isn't getting dragged down for some reason. I don't feel like dealing with this. It was working so perfectly. Oh my. Okay, so let's start from here. I know this is working. Let's try that. Oh. Oh. Oh, I think we got it. That's crazy. I don't know why I wouldn't drag the other fields just because they were condensed. Like, come on, really? Oh, yeah. We're good. I want to drag it all the way down so we don't have to do this next time. Okay. All right, so let's copy these, put them back over there where they belong. Control C, Control V. Yes. Wow. Really had that many trades that day? Goodness gracious. Man, yeah, I think we did. Okay, and this is where we started August 18th, 8, 18, 22. Come on. 8, 18, 22. We're gonna paste that. Oh, no, we're not. Not until we copy it again. Jeez. Do it by hand then. Copy. Well, not by hand, by hand. Okay, goodness gracious. All right, I think we have it now. You see why I had all these other fields condensed. It just gets like, I don't need all that other stuff. Oh, sweet. Oh, literally only one losing day in the last 10 days that we've tested. That's awesome. That is a really good strategy. I don't care who you are. Okay, so we had a 7, it was like a 770, it was like minus 770, right? And then let's see what it was. It wasn't huge, but it also didn't totally stink. So let's see. So we started with 19,985, 19,985, and we'll just hit minus because that works. 21,700, 21,700. So $1,700 a day. You can also do the math in reverse, but we'll come up with the same number. 17, 15, right? Is that what it was? and then so 1715 minus 770 or 715, whatever, it's close enough. Oops. Oh geez, close, clear. Okay, so whatever, 1700, 700. So we're still net positive for trading minis, 1000 over those 2 days, and those are hard days. I've done a considerable amount more of back testing, obviously, than just what you folks have seen on the webinar, and that was like the crappiest day that I've seen, really, honestly. That 770, just that one. Let's look at all the trades chart. Let's look at the equity curve. Let's make sure we have enough data loaded. I think we do. 300 trades. Yep, so we're right here. Let's zoom in on that. So so 221 trades. And I do say trades because, you could divide this by 3 since we're entering 3 positions at a time, but I think that those are all individual trades. They're positions because they're all the targets are not the same for each one. So they are trades. You could have 5 minis on the first position and 3 on the second and 2 on the runner, or any host of combinations. So for all intents and purposes, 221 trades in how many days do we have here? Let's count them just to make sure that we're not. So 1, 2, 3, 4, 5, 6, 7, 8 days. Repeatable, quantifiable, non-discretionary, 100% non-discretionary system. I'd like to ask everybody, how many of you could tell me your trading rules for the current strategy that you're using in a completely non-discretionary way? I mean, because we all have this software, and we well, not all of us, hopefully the people who don't have it get in contact with Dave and get it. But the people, for those of us who do, I wouldn't be surprised if we can actually tell somebody what our trading strategy is in a quantifiable, write downable fashion. But good luck if you can't do that. So 8 days, but we actually have 10. Maybe for the next webinar that I do, I'll go back in and I'll add those those 2 other days to the spreadsheet, so we have it all, and just make sure everything's all accurate. But yeah, in 8. What did I just say? 8? Yeah, 8. 8 days listed on this here spreadsheet for trading the E-mini, 1 contract per position, $21,000 or so. And here is our trade graph side by side, and do we have them all listed on there? 200 and how many trades? 221. Yep. So there's what our trades look like. Certainly more winners than losers. I don't know what the percentage is. Somebody was good about figuring that, helping me figure that out. All right, I think we call it. That's been 2 hours. If anybody is interested in buying the software, call Dave, 727-742-2626. I would just like to show anybody who doesn't have the software yet, I want you to get it. Like, dudes, like, come on. Look at, besides those 2 days that we happen to look at today, look at the 6 of the other days. Look at this. We start here, our first trades at number 12. So I guess it's not 200, it's 221 minus 10 or 12. Anyway, we start with this 443 tick bad boy runner right on the dot. Close, and then the first day we end with $3,900 a day. Yep, and then 4 to 6, another $2,000 a day. 8-3, we start out at 63, we end up at 12, $6,000 a day. 8-3, start at 12-2. This was a break-even day. which yeah, okay, that's good. All right, that's realistic. Break even day, all right. Well, close to a break even. I mean, the commissions are in there, 12.75, 12.25. Well, I guess that was our first losing day by like $50 or so. And then the 11th, we start at 12,215, and we end up at 18, so another $6,000 day. August 10th, we start our equity for the day at 18.3 and end up at 26, so 18, over a $2,000 day. Start at 26, 17, and then 19.8, so minus 700. August 18, we start at 19.985 rather, and then we end at 21,700. Commissions are included for 1,700, and over the last 8 days, 21,700. Even with micros, 1 micro per position, that's 6 days, $2,107. Yeah, I mean, you're not going to trade with 1 micro, put 2, 3 on there, then you're like actually making a living just with trading micros with this strategy, trading all day, very quantifiable. Let me show you folks the website where you can buy the software, and then I can take a nap. If I can find my window at this Kelly factory, why? There it is. Oh yeah, there we go. I should leave this tab like this so I can show the next group of webinar people the violation tracker industry summary page. So if you don't have the software, or I'm not going to log in. Oh shoot, it might have logged me in anyway. Okay, so yeah, we just go to product store. I'm actually going to post the link in the chat real quick. And then TachEon TimeWarp is this software that we're learning about today. Dave can be reached at 727-742-2626. David at backtothefuturetrading.com. Reach out to him. I got a deal for you. There's a code. There's a price, $24.95. Buy now. If you want, there's a 25% off if you purchase the software today and want to include that pro training room with Ron. You get 25% off of the pro training room price for $149 a month. Cancel anytime, kind of a deal. But right now, let's just go to the pro training room without. Go through the blah, blah, blah. And let me pull up the closing slides here. So we do have a serious choice to make if you don't have the software. Free lagging indicators that 95% of losing retail traders use, or one-of-a-kind professional institutional grade trading software like I just exemplified right here in this here webinar. Why wait? Opportunity knocks now. Invest in your future. Back to the future. So included in that price, it's pretty cool. You get 2 lifetime licenses, and that's just not 2 lifetime licenses for 1 machine ID. 2 separate machine IDs will work with these lifetime licenses. Free lifetime upgrades. I think I'm tired. Free white glove installation and setup by Miss Rachel herself. She will help you with everything that you need, and as far as getting the software installed, literally do it for you. Log into your computer and get it done for you. If you need her help, she will help. No extra charge. Free video archive training. Limited promo code is WARPOFF, WARPOFF. Let's see if that works. Still, just gonna make sure. WARPOFF. Apply. Minus $500, just like that. Call Dave if you want to talk about this. I've heard that if you call him, magical things can happen. But here's what you can get without even calling Dave. What will happen if I call Dave? I don't know. I'm not the sales guy. All I'm saying is, if you call Dave, call him. Actually call him. Talk to him on the phone. He's fun to talk to. 727-742-2626. And maybe something with this, or something with adding, what do they say on those infomercials? But wait, there's more. But to find out what that is, you got to call Dave. Call him on the actual telephone, text him. Or if you want to be one of the emailer people, you can email him too at david@backtothefuturetrading.com. So $500 off there. And yeah, don't forget, if you want private mentorship from yours truly, we can take anything from advanced pattern recognition, your 4s, your 5s, 6, 7, your 8s, your 9s, how to combine that with this system, or how to build your own system, proper backtesting technique, whatever, Ryan Jones scaling methodology, help with Ninjatrader and setting up your charts, alerts, all sorts of stuff. I'm really proficient with the Ninjatrader platform. So yeah, if you want any of that stuff, email me at jacob@backtothefuturetrading.com. I can also give you that fib tool that I was using. Let's see, I think we are good to go. Thanks everybody for being here. Let me just make sure there's no final questions. Thank you, Yusuf. Thank you, Mike, Paul. Nope, not going to do it, Paul. You got to email me first, because there's no way I can remember to do that. So if you email me, Paul, at jacob@backtothefuturetrading.com, then I'll email you back the fib tool. Okay, thanks, Paul. Appreciate it. Okay, because if I do it for you, then I got to do it for everybody. And there's no way that I'd be able to live up to that promise of like, oh yeah, place your email here in the chat and I'll email you later my free fib tool. Like, no, I want to see you do something, and then I'll do something for you, and then we can get like a team thing going. Yeah, appreciate everybody. Yeah, automation is coming. I'm not sure about automating my strategy with the open price lines and stuff, but anything is possible. I have heard that the boys, Michael and Ron, are working diligently. Well, they weren't working diligently on squat, but riding their motorcycles around the country for the last month. But now that they're back, they will be continuing to work diligently on the automation program for TachEon TimeWarp. That is, the release date of that is to be determined. Contact David if you're interested in any bells and whistles or any possible add-ons that he might be able to sweeten the pot for that $19.95 if you don't have the software. All right, I'm going to end the webinar like I have been. In trading, there are no mistakes, only happy accidents.